Good afternoon, traders. This is Christian Farmer, Strategic Trade Group, and this is your end of day recap for Thursday, the 21st of September. And well, we've got a lot to talk about today. I will try to answer some questions about, is what we're seeing in the downside price action, is it extreme enough? Do we think a rebound is coming? And we will talk about some of the seasonal factors as well, which I think you know about at this point, especially if you watch some of my end of day videos. First things first, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer right there. So what I will try to do in this video as well is, we'll kind of walk through what we're seeing right now in this market. And I try to also like interject a couple things to kind of watch or pay attention to, maybe to try to learn from. I've been, if you know my background, I used to be an institutional trader with Merrill Lynch for a good number of years. And I used to trade ETFs, and that gave me really the ability to kind of understand a lot of different areas of the market, like bonds and what's going on right now, because I used to have to make markets for big institutions, like big block trades of like blocks of TLT and blocks of HYG, and I needed to know how to hedge these things. And that's one of, if you ever speak to a, someone who did what I did and who had to trade all these different markets, it was really interesting, but your feet are thrown into the fire, because if you don't know how to hedge some of these products, like fixed income products or so forth, then you have the chance to get run over, because you're not dealing with 1,000 share trades, you're dealing with million share blocks. And many times it's much more than that. So same thing with international markets too, and hedging FX and, doing all of those things. So, that's why I like to go over some of these concepts, because it's interesting than not just knowing, the equity market, right? And knowing how all these things kind of fit together. It's kind of a bit of a puzzle. And yes, and you do have to worry about what goes on in bonds and in currencies. I think what happened for a number of years, and, you could quote a few different years. You could talk about 2020, when everything was going up and the market would just bail traders out of making any bad decisions. You made a mistake and you didn't sell out of a position that was going down. Oh, the market would just bail you out the next couple of days, because interest rates were at zero and the Fed was, providing liquidity, throughout the year, and so on and so forth. So you were bailed out of your mistakes. But also, for not just 2020, but for a number of years, interest rates overall were really low. So you didn't have to worry about the bond market. It just went flat. And, a lot of people are looking at some charts and they're not grasping the fact that any fixed income product, right, is going to have an interest rate exposure to it, right? So it's going to move with what treasuries are doing, right? And there's always this spread. So in any treasury product, whether it's high yield, corporate, whether it's muni bonds, whether it's inflation protected bonds, right, they are going to have a spread over treasuries, but they are going to follow what the treasury market is going to do. So they're all going to go down. And I see every once in a while someone, geez, this HYG chart doesn't look good, or the LQD. Yeah, well, you have to look at the TLT chart first, or the IEF chart first, to understand, hey, there's a big move in interest rates, right? That is not, so when you look at HYG, people got comfortable with HYG as it's kind of moved a little bit like an equity, right? Because it is high yield bonds. It does have a proportion of that, but it also has a proportion that it's going to move with what treasuries do. So I talk about this in some of my end of day videos. We'll dig into a little bit of this, but it's better, like if you're looking to pinpoint. So, for example, like treasury inflation protected securities, TIPS, right? They have an inflation component, but in order to minimize the inflation portion of it, you have to look at that in terms of what it's doing versus the treasury market, and that will minimize the interest rate move. So we can kind of start there. And we could talk a little bit about that, but here's the TIP ETF. And again, like, this is of importance right now, because you want to know what inflation is doing. And remember, inflation kind of peaked out this ratio, right? And why am I comparing this to IEF, right? Because that basket of treasuries in that ETF has a similar duration to the basket of securities that are in the TIP ETF. So when you look at them one over the other, then you can minimize what you're trying to examine. In this case, what I'm trying to examine is inflation, right? And we're getting back to almost where we were in terms of inflation. So inflation is not cooling down right now. It's actually looks to be picking back up according to this. Now, this is only one gauge of inflation. It doesn't look at labor and it doesn't look at anything like that. I'm just looking at what Treasury inflation protected securities are doing, and I'm weeding out because if you just look at, for example, if you just look at TIP, right, you're going to think, so let's look at the 5-year chart, right? The 5-year chart of the other one, but you're going to look at this and you're going to say, oh, inflation must be going down, right? Well, that's not true. It's because the interest rates are moving up and therefore the bond price is going down. If you don't understand any of these concepts, it does take a little bit of understanding that, when you hold a bond and the prevailing, this is like CFA level stuff. But when interest rates go up, that means bond prices are going down, right? So that's why you have to look at it over what treasuries are doing, right? It's called treasury spread. So again, this is a complicated subject. If you're not grasping it, that's okay. We'll move on. But I just want to make sure, if you don't know the fixed income market well, that you make sure that you understand that we've got a very big move in interest rates that's going on right now, a very fast move in interest rates. And some people like to look at the TNX chart because that helps them, because it's just looking at yield. So if we do that, and again, the reason why I'm covering yields first here is because this is really what's a big driver of the market, right? So even though what the Fed did yesterday, right, they held, so you may ask yourself, well, Christian, I don't understand. The Fed didn't change interest rates yesterday. Well, they didn't. What they control is the short end of the curve, right? What exactly do they cover? They're changing the overnight rate, which banks lend to one another, right? What we're talking about here is longer term interest rates. All of these things matter: the 2-year, the 3, the 5, the 7, and the 10, and they're going up across the board. The 2 didn't go up, but look at what happened here in the 20 and the 30 year. So what I'm looking at is this column, which tells you the maturity of the bond, right? So United States government or treasury bond, and then the interest rates, and they're climbing very fast, right? 13 basis points is a big move. So, so how does that translate? So, and you could look at these yields, we could look at the 20-year or the 10-year, but, it's breaking out, right? And of course, when you look at a bond price, right? So now you could see this. Now, doesn't that move like, when we go back to some of the other charts, right? So all of this move, we're just looking at the interest rate. So that means any bond that you look at is going down because bond prices are. So here's TLT, for example, right? So TLT is one of the most widely looked at bond ETFs, right? And we'll kind of have to look at the weekly chart, but yeah, it broke the value area. Could this be something that reverses? I mean, it could, but we don't know that yet, right? So you're going to hear me say that a lot in this video as I'm trying to, I don't want to make this a half-hour video, try to keep it 20 minutes, but you're going to hear me say this a lot in this video is, okay, this is something to watch. This is something to watch, right? Because this is a pretty decent gap down. Now, of course, if you look at Treasury futures, right, something that's more continuous, there's no gap, right? But it does look like we took out another version point of control. So, it's a very big move as this was already trending down. So sometimes that could be an exhaustion move, but we don't know yet. It's too early to say whether or not that's an exhaustion move. It'll be telling in the next couple of days whether or not this bounces back. All right. So again, these are things that So here's another thing as I go through this video. Right. Again, I'm trying to help with these explanations, but everybody always wants the answer right away. Right. And it's part of the problem that we have right now now in this world, everybody always has like they want immediate gratification. They want the answer now. In trading, you don't always get the answer right away. You've got to be patient. That's what makes trading so hard, I think, in modern days right now, is because nobody has any patience, right? They want immediate gratification. They want the answer right away. So, yeah, so we don't know that yet. Now, what I try to do in my analysis whenever we have a sell-off is, and we're going through a correction or pullback, is I begin to try to check boxes and say, okay, are we getting to the point? Because none of us have a crystal ball and knows exactly when the market is going to reverse, but we can, it's a probability game. The more things get oversold, whether it's you know, price action itself, or if it's some of the indicators that you look under the hood, these things can help determine whether or not we're getting close or not. So the price action was obviously very ugly today. One of the things that I pointed out, you know, early on was that there's no buyers right now in equities. And I think that this interest rate move is spooking people. You know, and I don't have the updates yet for what the equity put call ratio was, but I could tell you what it was yesterday. It was not extreme. Let's see if I may not have it up anymore. Yeah, so here's the equity put call ratio. Oh, so this is just one thing, by the way, right? I never want to just take one factor like an equity put call ratio and say, oh, I'm going to make a decision based on this. But based on yesterday, it was only a 0.79, right? We're not seeing that like panic buying, right? That's another thing that sometimes we tend to look for, is when everybody starts buying puts, that's when the market usually reverses. That's one of the factors that can cause the market to reverse, because it's just the way it works. When everybody starts, oh my God, you know, I have to sell. They've washed themselves out of their longs, and now they're on the put side. That is usually how the market works. And from this reading that we have from last night, now again, I don't have it for today, but it's not extreme. So put call ratio, not extreme. All right. What about breadth, right? So that's something that I monitor every day, because it can be like you know, an idea of whether or not I want to be putting risk, or I think that the market is constructive for the day. We know that over the last you know, couple weeks, right? And you can go into our my commentary channel, and I've been posting this just as a you know, kind of a heads up, that this has been ugly, right? I mean, this is the McClellan Summation Index. It gives you a sense of whether more things are going up versus down, right? We know that this has been trending down, right? We had this brief crossover, and then it flipped back to the other side. It had the brief crossover back at the last week of August, and then it flipped back, right? And that's for New York. This is for NASDAQ. So breadth has been horrible. Breadth is trending down, right? We need something to tell us that that's going to flip, right? Right now, you know, based on what we're seeing, we know that that's not doing it. Did breadth get extreme enough? So this is also something that I monitor. This is down volume versus up volume, right? And this is looking at this is the last year. You could see that there's been various different peaks where things really got washed out. There was heavy selling. Was today heavy selling? Well, there was definitely some selling. There was 4 points, I think, for the MOC today, which I don't pay that much attention to, because the MOC is, which I don't want to get into the subject, but is not the best thing in the world to go by. But I do take note when it's a really large MOC, market on close. And today was $4.7 billion was the final reading that I saw. So yeah, there's definitely some selling, but this is not as extreme as we've seen other times. And if you go back, certainly, like, you know, last year, there was much heavier selling. You know, September, like this September on 9/13 of last year was a pretty good indicator. And, you know what happened in September and October, we started to begin to go higher. So it was pretty washed out. So this peak isn't quite there yet. So good to see that there's some selling, but it's going back to what I was saying about the put call ratio. It's not extreme, right? What about the NIMO, right? This is something also that I tweeted out earlier, right? And then I will review the price action. But remember what happened when you could see this. There, I'll blow it up so you don't have to squint. But remember back in the end of August, we had a nice oversold reading on the McClellan oscillator, right? And you don't have to know the math that goes behind all of these things. You just want to know if something basically gives you an oversold or overbought reading. And you could see where we are now, right? And again, this hasn't updated for today's action. It won't update till like after 5 o'clock today, maybe 6 o'clock. I'm not sure what the time is, doesn't matter. But we're not oversold yet. So not extreme. So now that we've gone through a couple of these things, right, let's talk about, and we've talked about bonds enough, right? And how bonds, bond volatility, the equity market does not like bond volatility, especially your higher valuation type names. So one of the things too, and this is another thing where I try to help traders during the day, because everybody always gets excited for whatever reason. I don't really understand why people don't have this in their mind. Do not get sucked into a lunchtime bounce. Why is that? Why is that important? Right? Why do sometimes we see these bounces at lunchtime when we're trending down for the day, or when we're trending up for the day? You may see a little bit of a pullback, right? It happens both ways because there's no volume, right? So it's the equivalent, and I teach this a lot in these end of day videos because I try to help, but it's the equivalent of if you're slamming down the accelerator on a car, you're accelerating. Right. So same, and so I'm using this as an analogy for someone who's selling really hard, right? If they've got a big order to sell over the day, right? It's a huge order to sell over the day, right? The VWAP algorithm, volume weighted average price, people use this now as a trading indicator, but really it's an algorithm. People use it to slice an order. So if one of the most commonly used orders on a trading desk, because it's an easy order, and sometimes people use it for pair trades, is a VWAP algorithm. Simply, an institution may call a broker and says, hey, sell my order over the day and VWAP it, meaning sell it over the day, but use volume. So only, so buy or sell, or execute the order where there's more volume during the day. Now, most trading desks have a simple algorithm where it will look at the history of the volume history of the stock, and it will execute more in the first couple of hours of the day, and it will execute also a good chunk of the order towards the end of the day. And in the middle of the day, it won't execute much. So if you're that person, right, who's got that big order, right, same thing with a car, you've got your foot down on the accelerator, right? Once that algorithm stops selling, right, it's the equivalent of taking your foot off the accelerator. What will happen with the car, right? The car will begin to slow down, right? And that's exactly what you have here. You've got all that pressure on a stock or stocks in general, and all of a sudden you take the foot off your accelerator around 12, and then so it's a little bit of a relief bounce, and then once you begin to press down on the accelerator again, this is what you have, right? So be mindful of that. The timing isn't perfect, but I always say you've got to get out of, so if you're playing a bounce, right, you want to see the market continue to go up past 115, 120. And then you know that the selling has kind of maybe it's something else that's taking place other than and it can be, hey, there could be some news on the tape, it could be some other market reaction where all of a sudden the market begins to change. But do not get sucked in to these little bounces that you have. Look at what time it is, and if it's around 12 o'clock or 1 o'clock, make sure you look at your clock and say, hey, because this last green bar was at 115. Right. And that VWAP algorithm really starts to pick up again around 1:30 and into the 2 o'clock hour. That's why you have this. All right. So be very mindful of that. So back to, so I think I've tried to answer the question about with some of the indicators. S&P, we've broken through the lows from August. And every time we've hit one of these levels, right, we're just slicing through them, right? It's another word that I've been using all day today, right? And I have things on my charts. We talk about virgin point of controls, we're just slicing through them, right? And every time that we get to one of these virgin point of controls, it becomes a battle of the buyers and the sellers. There's just a lot more aggressive sellers right now. In fact, I don't see a lot of buying. So that's where we are for S&P. And we want to get to more extreme readings, in my opinion. So what do? You have to kind of sit on your hands and try not to, get sucked into this. So here's cues for and here's, by the way, like a really good, here's one where we took out, like, this is what you want to see. And I think I went over this in yesterday's video, right? We took out this level and then we bounced, right? This is a good one to fade too. We took this out, began to sell off. We took out this one yesterday, and you just don't have, you've got many more sellers, aggressive sellers, than you do buyers, right? So you have to sit on your hands and try not to get exposed. What I generally try to do when the market does this, some people are very good at playing shorts and playing to the downside. Over my trading career, what I basically do is just try to minimize the pain when we're going down. I try to have more cash. I try to be defensive, right? That was a word that we talked about in yesterday's video, right? Because I had a nice trade today. I was in the Splunk trade today, right? Which I talked about in yesterday's video, and I think the day before. So, that is the opportunity that you have to sacrifice. So if you're going to go all cash, and if you're going to go all short, right, then you're not going to catch Splunk. Now, I know this doesn't happen very often. In fact, it's very rare to hit a name that gets bought out. But that's what you have to weigh, right? With going all short, going all cash, right? There's always opportunities that you're going to miss. Now, do I view the opportunities few and far between right now? Yes, of course. So, I think it is better to be mostly in cash until we start to see, some signals. But I do try trades. I tried a little bit of a trade today. Here's my trading, and I show this on most days. I don't show it every day in the room, but I did show it yesterday. So I did take off my Splunk trade today, 146 and 145. I had some SQQQ on from last night. I got out of that right on the open. I was thinking about going back into it, but I didn't. Right? I really didn't do that much. I did try a couple trades. I tried some, the refiners were doing really well. I lost some money on PSX today. It just didn't work out. I ended up buying it. I was looking at what the other refiners were doing, which were up around 5% for the day. And I thought PSX might follow through. It did not. IBM, I might just, I took off some of the position. Again, these are all starter positions, and same thing with Splunk, by the way. I didn't have a big position on with Splunk. That would just be stupid in my opinion. With what this market is doing and everything that we've talked about, there's no way I'm going to hold a big position. So it was nice to get a buyout, but Splunk was not a big position for me. There's just no way I'm going to add a lot of risk here. So again, this is kind of holding a little bit, but it could fill in here. It could definitely fill the gap here. So you have to be mindful of that. ESTC, right? Really unusual. I think because, high growth is the last thing that you want right now, or the last thing that most people want right now, given the move in interest rates, make these things more and more expensive. But I have to say the elastic move getting back above a 5-period moving average was pretty good. Akamai is another name that I'm still in a little bit. I actually added a little bit to it because it's been a nice little trade for me. And this had it basically, I think that's kind of an inside day, and still looks pretty strong. So there's some pockets of strength like this. But again, it's a matter of exposure, and it's a matter of understanding that we're in a very, very difficult environment. And we might be like that until we get to the end of September, at least through the end of the second Jewish holiday, which I believe is the 24th? Regardless, I'm not going to start buying the day after Yom Kippur. I'm going to wait for my indicators to tell me that things are looking better. But yes, as we went over in yesterday's video, IHF, right? I talked about how we had a really thin value area, right? So this was the best performing group today, up 38 basis points. At least I think it was today. K-Web. Yeah, no, I think that was, I don't think anything was up for the day. So yes, I can't believe it, but yes, this was your best performer. Congratulations in terms of groups. Managed healthcare up about 40 basis points. That's it. All right, guys, I think I covered enough things for enough concepts. Like I said, I don't want to make these videos that long, but clearly there's a lot going on, and patience, words like patience, defense. Defense wins championships, remember? That might be the case for Giants and San Francisco play tonight. I'm not going to get into that, but that's the way, always when we have market corrections, the best thing I could say is defense. Oh, the last analogy that I was going to use for the end of the video was, do not be the first buyer who comes in. Right. It reminds me of the movie Animal House. Right. And if you know the scene from Animal House where Delta gets beaten up, and John Belushi's character is all revved up, and he says, "Hey, let's go get those guys. Who's coming with me?" And he's the only one who runs out the door. Right? It's kind of the same thing with stocks. If you're the little guy, which I think most people watching this video are more retail traders, maybe some small institutions, right? You can't move the market, right? You need the institutions to come in and support the market. They're clearly not doing that yet. So if you're buying and sticking out your neck, thinking that you're going to time it, you've got to try to pick up on what the institutions are doing, right? That's what looking at things like breadth helps a little bit, and noticing, more things going up than going down. All right, guys, that's it for today's video. Have a great night. See you tomorrow.